Right, guys, here we are on daily time frame of EUR USD, and the butterfly which I spoke about yesterday is still intact. So this is the butterfly I spoke about yesterday. All right, so this was the butterfly which is still intact. I will just, for the clarity of the screen, I will remove these lines. All right, and this butterfly is still valid as an uh, as a reversal pattern as long as price stays below this swing high. If the daily candle is closed above that high, the butterfly will be invalidated. So now I'll take you to the 1 hour time frame to understand what exactly happened today. CPI released, sorry, not CPI, preliminary GDP got released today, which is, uh, of course, better than forecast. And however, this upward action, which actually you can see now on the chart, wasn't created by this news because this news just has been released 28 minutes ago. This data came 28 minutes ago. So the upward move actually happened naturally because I said yesterday that this was the minor resistance. This was the minor resistance. This and these were also the minor resistance. So yesterday I wasn't sure whether or not price will start moving to the downside, which is why I mentioned yesterday that we will take set position only if price crosses below this low. And yesterday I used a chart where the candle pattern to the downside was red and to the upside, I mean bullish candles were blue and bearish candles were red. Today, the bearish candles in this chart is black. So this is where I was supposed to sell if the price returned, but price did not return and didn't give us chance of sell, and price kept moving to the upside, and it returned from somewhere around. It returned from somewhere around the previous swing high. So here you can clearly see that this is the previous swing high, and price actually returned without crossing this resistance, which is a bearish sign. And today's US preliminary GDP, even though it is 27 days delayed, and like I said, it's not the significant factor. However, it has triggered this bearish action today, right below the resistance, and the market was already anticipating the downward move from some resistance area, and market was waiting for a triggering factor, and this worked as a triggering factor. So we have already entered sell position right after the release of this preliminary GDP, and we have considered this as a triggering point. But butterfly is still intact, which is the main support for our bearish bias here. So if we want to look at the target for this trade, and if we want to talk about what probably can happen in this trade, let's discuss two important things. Number one, whether or not the technical scenarios of yesterday is still valid. So we got a new resistance. However, the technical scenario on daily time frame is still valid. Butterfly is intact. It is going to work as a reversal pattern. And 1700 area, which was the support yesterday, is still the support. So nothing had changed technically much on daily time frame. However, the picture on 1 hour time frame had changed. We do not have any influential data today or tomorrow after this prelim GDP. So we can go ahead with this trade. And now let's talk about the exit in case your USD returns to the upside and start moving to the upside. We will wait for the closing of the daily candle. There is a risk in waiting for the daily closing because daily closing may happen maybe 500 points to the upside from current price, or maybe 600 points to the upside from the current price, because the range can be easily 1,000 points in a day in your USD events, though this is the December month. So what we are going to do here is we are going to risk at least 600 to 700 points, and we are going to measure whether or not we have this much reward to understand that we are complying with at least 1-to-1 risk reward policy, which is a fair policy in most of trading. So let's look at the price level right now. It is 1773 right now. So even if you are watching this now, you can still take the sell position and you can target around 1705 or 1710. So we do have almost like 640 or 600 points on the table to the reward side. So even if we are going to take a risk of 600 points by holding the trade by the end of the day, this is a fair enough. I mean, fair enough risk reward to enter the position. So that's all in short, and we do not see anything else tomorrow either. Which I mean, if you look at the chart, sorry, not chart. If you look at the economic calendar, I don't see any significant, impactful data or high impact news tomorrow. So we can go ahead with this trade. That's all. Thanks for watching.